G'day guys, welcome to another Financial Fruits episode 14 with Josh. Hope you guys are having a great day so far. I've had to re-record this episode twice, okay, including my Lost Ark episode, because this is the funniest thing, and you guys will find it pretty funny as well. I had my mic muted the entire time, so I looked at my Lost Ark thing and I'm going, oh, why am I not hearing myself speaking? And I was like, ah, crap, I wasn't talking the entire time. But let's get into it. Last episode we talked about life TPD, income protection, and trauma, and probably the need of risk insurance, but we only briefly discussed these areas, okay? We didn't really go into the meat and potatoes of what you do actually use it for. So let's talk about life insurance. So life insurance, we discussed that if you die, a buyout, a payment occurs, and it is pretty much the simplest form of insurance. So it can be used in two ways. It can be used personally. So this is mainly to cover your spouse's retirement, debts, and education for kids. Could even be medical or funeral expenses too. So even funeral / medical expenses if needed. It can be used via business. So let's just say, for example, Bob and Greg owned a car store. Let's say it's worth 1.8 million, so they put 900,000 each as a life insurance policy on each other. So be aware that you don't have to buy a life insurance on yourself. You can buy it on other people's. However, there are tax implications, okay? So seek advice on this one, okay? So pretty much let's get a quick explanation how Bob and Greg work. So basically it's a buy-sell agreement where they have an agreement in place that if one of them passes away, that the other can buy them out from the estate. So let's say, for example, basically in their will, they'll have, I wish for my business to be sold to Greg for X amount. And then basically the X amount that Greg gets from the life insurance policy payout, because Bob passed away, is then basically the business is sold, and Greg, and then basically Greg picks it up. Now in wills and stuff like that, in legality, it doesn't work that simply, because you can't direct your executor to sell the business to someone. Sometimes like there's a gray area in legality, but that's just a simplistic way of how it occurs. Basically, business partners would buy out that person's share basically as well, instead of basically Greg having to come up with 900,000 out of nowhere. He gets it from the life insurance by putting over the partner, and vice versa. And sometimes a business can do it and stuff like that as well. There's also such thing as key person insurance as well, which we'll talk about later. But that's what the life agreement as well. This can be done. This can be done in TPD. In TPD as well, where if the person can't run the business anymore, that the other person would be able to buy them out. That sort of thing. So both of these can be done. So generally, life and TPD insurance, like generally used in buy-sell agreements to buy the other person out effectively as well. So just be aware of that can occur, and you can use life and TPD insurance for that as well. But just be in mind when you're doing this, when you are doing this sort of arrangement, that there are capital gains potentially involved with it. So just be aware of that, because if there's tax implications if you hold a capital policy of another person, where you could be liable to pay for capital gains tax. You need to be seeking advice. You need to check your tax system. You need to check your insurance system as if this is even allowed in the first place. Now, also, if you do the buy-sell agreement, obviously the person you're trying to insure is the one that goes through the tests, not you, essentially. But that's how like the buy-sell agreements are generally set up. Is for those insurance policies. Alternatively, they get their own personal insurance, assuming that the business is going to be given to another person. But generally, the safer agreement as well is generally the buy-sell agreement, where the other person will buy out the other person effectively, basically. Now, obviously, there's a lot of downsides and upsides to strategy. When the business gets, increased value since then or decreased value since then, it really depends at the end of the day. Now, with life insurance, it's probably one of the simplest ones. So if you simply plop, you die, you get money. That's pretty much it. TPD is generally a rider. So let's go total TPD, i.e., total and permanent disability is a bit different. So basically, there's a test, which is, I believe, it's 3 out of 5 of daily duties to qualify. You can also get partial TPD as well. So with TPD, this really depends on your policy. Okay, so not all of these, like there'll be some similarities and some commonalities among policies, but there are specific partials and other benefits that you would qualify for, which is policy unique. Like, let's just say, for example, that, I'm going to say some serious ones, like multiple sclerosis, stuff like that, but that's TPD. Like, for example, generally, TPD, like cancer, for example, can be TPD, where they can't work due to being sick with cancer, but it also could fall under trauma as well. But there are insurance policies like that, where, like, cancer is one where it can fall under full TPD. I think some heart conditions as well can get partial TPD, but this also, as I said, it relates to your policy. And partial TPD means you get, you able to get claimed that much of it. Generally, TPD is a rider to a policy, and what a rider is that it uses the same cover amount. So, for example, if you insure yourself for 900,000 life and TPD, if you claim TPD of, let's say, partial 450,000, your life cover is now 450,000. Okay, there's no, it doesn't go back to 900,000 unless you purchase a buyback feature in a part of your policy. Just remember, basically, all insurance policies are contracts. Okay, so they're all contracts. So there's no difference whatsoever at the moment. Now, overall, with TPD, you have to fulfill a lot of duties. You can have loss of limbs and stuff like that as well. Like, generally, loss of limb can qualify you for TPD, as well as losing an eye or anything like that can do the same. So, most of the TPDs, like, total and permanent disability is, you can probably claim on it as well. Despite you may be able to still work, you can probably still claim on it because your life is definitely affected by it. Now, TPD is another one where, like, you use it for a buy-sell agreement as well. In Australia, let's talk about Australia, life and TPD is tax deductible if it is in superannuation. It is not tax deductible outside. However, in super, insurance has to be personal. So if you're thinking, hey, I can do a buy-sell agreement in super, you can't. Okay, you can't buy an insurance policy on another person in your super. So that's your retirement vehicle, on yourself. Some people do that where they buy insurances on themselves. So they assume that the business is going to be sold to their partner, or a partner will buy out the business. So instead of doing the actual sale, like, as per se, like, they'll give it to them in the will, but the insurance payout that they get is, what the proceeds they would have received, kind of thing. Basically, you take the best of both worlds, where it's inside of super and getting deductions as well. Now, buy-sell agreements are generally done outside, and most of the other personal stuff is generally done inside of super, mainly for the fact because the things are tax deductible. Life and TPD insurance is a capital expense, therefore that's why it's not tax deductible outside of super. Hence why you can get done for capital gains if you put it outside of super, because it is considered a capital investment, which is, funnily enough. Therefore, you can't claim the premiums on it. It forms part of its cost base. It's a kind of a weird area, but, like, you have to seek financial advice and seek accounting on that one, but that's how it goes. But anyways, guys, that's going to be it for Financial Fruits today. It's going to be a short one. Mainly the reason why it's going to be a short one is because we just, go through life TPD. Next time we'll be going through trauma and income protection. It gets a bit more hairier, but essentially what you're going to do is just you look at your policy document, see what you're covered for, see what you can partially claim, and stuff like that as well. Hope you guys have a great day and see you guys later. Peace out. Bye.